You are welcome to Remit Forex Academy. Remit Forex Academy is a subsidiary of Remit Trade Academy. We have two academies, the Forex Academy and the Crypto Academy. So you're welcome. I welcome every one of us once again to this wonderful training. And like I said, I will be taking you through the course. And one thing I would like you to do for me tonight is to help subscribe to our Forex channel. Our Forex channel is this very one here, and this is the Forex channel, Remit Forex Academy. So you can help subscribe. The link to subscribe to the channel will be dropped in the group right now. So you can check the WhatsApp group and you will see the link in the group right now. So you can just take maybe 1 minute or less and subscribe to our channel as we start the training. And the purpose for you subscribing is so that you receive daily updates. Okay, like yesterday I posted this update right here, Euro USD and GBP USD analysis, and it's very important for the weekly wrap up and other stuff. So you can also find other valuable forex resources. So other valuable forex resources, you can also get them here. And if you are just new here and you don't know anything about trading, we have courses here which I'm going to post the link in the group that can help guide you from the very beginning, like this very course right here, forex trading course for beginners. And then if I go back a little bit, you will see another one right here which can guide you from the very basics. So the ultimate forex trading beginner guide. You can get these two courses and begin to watch them. It's a very long video, but I guarantee you it will help you greatly. So help subscribe so that you receive updates on signals and other technical setup and price analysis. So that having said that, tonight's training is going to be an interesting one, and I guarantee you that you're going to benefit maximally. And today's topic is forex trading strategy that guarantees 95% win trades. So when you talk about this, then what comes to your mind is what kind of strategy that can guarantee a trader 95% win trades. There are a lot of strategies out there, but the truth remains that there is no holistic strategy, which means there is no strategy that works 100%. Strategy must have pitfalls, and the only way you can overcome such pitfalls is when you've actually mastered your strategy over time and then try to adjust and put some things in place, and then it will work better for you. So what I'm going to show you today is going to help repattern the way you see the market, first of all, and secondly, the way you read the market and the way you take your trades. So it's very important. Stay till the end of the course. So forex trading strategy that guarantee 95% win trades. So in the course of this training, we're looking at R and S trading strategy that changes everything. So what is R and S? R and S is support and resistance trading strategy that changes everything. If you can agree with me, for those of us that are already trading, you will believe with me that almost all strategies in the market revolves around resistance and support. Why? If you are trading SMC, if you are trading patterns, the chart patterns, if you are using Fibonacci trading methods, or you are using other block in forex, you are using demand supply, all these strategies, including divergences, they revolve around support and resistance. And that is why support and resistance concept is very, very important. And I'm going to dive into that in a moment. And then the second thing we're looking at is forex S and D trading concepts. So the supply and demand trading, for me, is not actually a strategy per se, but it is a concept. And there are things you need to do to properly identify S and D, that's supply and demand levels on your chart. Because if you can do that, then you have done 50% of the work, because the market move based on demand and supply. Just like the local markets, if you go to any local market that is very close to you, you see only two people there, buyers and sellers. And buyers and sellers are the people that move the market. And I'll also talk about how to win 95% of your trades, and lastly, the winning mind concepts. There is a lot about the mind, so you must have a winning mind concept. You must have the mind of winning for you to win. If you don't have it, then I think forex trading is not for you, because the majority of it is psychological. So that is what I'm going to be taking tonight, and I'm going to take it gradually. Then if there is no time, I may skip some of it here, but I want to explain the first two very well in detail. So the first thing that comes to mind when you hear about support and resistance is your normal way of trading support and resistance. That means if market is moving to the upside, let's say for example, if market move up and come down and then move up again, you can say this very area is a resistance. Reason why: market move all the way from here to this area. So that means when market move from here to the upside to this very point, there were people that buy the market from this very zone. So they bought the market into this area, and all of a sudden market come down. Two things happen at this very point. The number one thing that happened here is because the people that bought at this very point is collecting profits right at this very area. Not only that, because this is a resistance, in other people that understand resistance and support concepts, people are also selling from this very area as well. So two things happen: people that bought here as closing their trades, and people that want to counter trend trade are opening a sell position. So the market have to come down. Then what actually happened here then is another two things. Number one is that people that sell from here are actually closing their trades, and people are actually buying from this area, so market move up. So that is actually what moved the market up and down. So market move up, meet resistance, and then come down, meet support, move up. There is a common idea that when market is moving in this formation, you trade with the trend, and it is very important. You don't trade against the trend. So for you to trade with the trend perfectly, you must have to identify support and resistance on your chart. So a support level, you can simply put, is a level where the market move up from. Okay, so it's have a kind of an aid that move the market to the upside, just like this area. So if you look at the chart right at this very point, you will discover that at this very area on EURUSD, we see the market from here come back down. This is a resistance because market move all the way from this very point and to this very area. So market come down from resistance and then meet support from this very area. Market begin to move upward again up to this very area. So the concept of resistance and support is what actually move the market, nothing more than that. And like I said, every strategy that you have heard of revolve around support and resistance. You can go and find that out yourself. A resistance is a level or an area where buyers meet a restraint from moving to the upside. So therefore, market come back down. So you see it as a ceiling that resists you from moving up. Okay, so anything that resists the market from moving up is called resistance, and anything or price level in this case that support the market to move upward is support. Now, one thing very important about this concept is that we traders, we have to understand that support and resistance is not a particular point. It's not a single price level, but it is a zone. So when you consider the zone, you must have to pay attention to that very zone, and most persons don't draw their zone perfectly. So you must consider it as a zone. In this very case, we have this very area as a resistance, And we also have this very point here as an important support at this very area. So we have support here as a zone, and we have resistance here as a zone. So you must have to understand and learn how to master the act of drawing perfect support and resistance level. So having said that, another thing you must have to understand as well is the fact that when market is moving upward, let's say for example in this very case, if market is moving upward and they come back down, move up, come back down, move up, just in this formation in an uptrend, when a resistance is broken, so if a resistance breaks, just like here, market is going to move upward, and then the possibility that the market is going to come back down, this very place where the market break will likely turn support for the market to move up again, and that's what creates what we call an uptrending market. So therefore, we simply put that in an uptrend, you must have higher highs and higher lows. So these higher highs, and we have higher low at the bottom right at this very point. So when the market is moving in this formation, market is moving to the upside. One very important thing I want you to note from this training tonight is that not all support and resistance are important. Not all support and resistance are important. What that means is you don't need to consider all support and resistance levels. That is why in the academy we teach in such a way that you focus on the more important point, because if something is less important, why giving it attention? So if something is of less important, either you don't give it attention at all, or you give it very, very little attention because it's not important. So therefore, the need to identify strong support, or what we call key support and resistance, is necessary. So once you can do that, then you can be able to trade 50% of the time. That is, you've done 50% of the work already, because those levels, markets have 90 to 95% of the time to obey or react to it. And I'm going to show you that in a moment. There are key concepts, there are things you need to do to identify those levels. First of all, if you've watched maybe videos on YouTube and some stuff like that, the number one thing you need to know is if resistance reacts several times. Let's say for example this very zone, markets come here several times and reject from it. It's a simple concept. And this very area, markets come to this very zone and react from it. You can consider this very area a strong resistance, while you can also consider this very zone a strong support. Reason why: anytime the markets enter into this area, we find rejection to the downside, and anytime the markets enter into this zone, we find movement to the upside. So therefore, this level is very, very strong. Also, for an uptrending market, if market is moving upward and the market move and then come back here, come down, come up again and break, and then move up just in this formation, then it means that this level is very strong. It's a support level, but we also have a resistance level right here, that when market break, then it come back here to retest it. So we have strong support and resistance right at this very point. You can find this similarity on your chart, but one of the most important things you need to note about resistance support is that you don't need to take trades anyhow, which I'm going to talk about in today's training. You take trade with certain precautions. So there are precautions you need to take, not because a level is strong, market is going to move from there, yes, but there are things we need to know, there are things we need to find out from that level when market comes into that very particular zone. And I'm also going to talk about that in a moment. So the second thing you need to also note to identify strong support resistance, this one is very, very simple, is using an indicator. that can help you very fast to spot out the key levels without you spending time to identify it. So if you are very new to trading and you don't really know how to grab the concept of key support resistance, one of the indicators you can use, which I do use most time and which we also teach in our academy, is the stochastic oscillator. So the stochastic oscillator is market that shows it's an indicator that shows momentum in the market. So it shows you where there is momentum, where market is moving upward, and where momentum is coming downward. It is not a trend indicator, it is a momentum indicator only. And for you to use this very indicator to spot out your key support resistance, which is very, very important and simple to do, is to actually look at few things which I'm going to talk about too. And let me just increase the visibility of this very indicator so you can see very, very clearly. Okay, so the thing you need to do is to focus on when the market enter into overbought and oversold condition. I'm not talking about how to trade this indicator today. I just want you to know how to use this. So how you can use the stochastic oscillator to identify strong support and resistance is for you to wait for the market to enter into oversold and overbought condition. So when markets move out of that very, very zone of support and resistance, how long does it move? Okay, so let's say, for example, in this very case, which is a very strong support, the one we need to pay attention to, market move all the way from here, and at this very point it was at oversold condition. So market at oversold condition, and it begin to come out of oversold condition. This area is a strong support for me, and the market begin to ride up. I will not consider this area as a strong support. I will not consider this one here as a strong support. Rather, I'm going to consider where the market paused and turned back down again, and that was exact same point right here where the market started going down into the next oversold. I want to repeat again. You see, from here, market dropped from here, but did not enter into oversold region. The stochastic indicator is divided into three parts, or two parts as you can know. We have this 80% mark, which from 80% to 100 right here is your overbought condition. Market has overbuy, so therefore it's going to come down. And then from 20% here to 0 is your oversold condition. What that means is market have been buying, and so therefore it's going to go up. Okay, after you've known that, it's a simple concept. And then when market move from an overbought or oversold condition, you need to watch the way market move from that area. Let's say, for example, in this very case, market move all the way from here to this very area. The reason why we are not paying attention to this very area, which is also a overbought condition, but when market drop down from here, market did not really enter into the oversold condition. But if you look at this point, market enter into oversold condition at this very area, if you can see my cursor, and enter into overbought condition here. Then from here it come down. So I will identify this very point as a strong support, so I can draw my zone from here. And then I can also identify this very area as a strong resistance, very, very important. And then I can also identify this very point right at this area, because at this point is this very area. So this very point too is a strong what? Resistance. This is the way you identify strong resistance and neglect others that are not important. And then right now you can't really consider this as a strong support. The reason is because market move all the way from here, support at this very point on the oversold condition on the stochastic oscillator, and move upward. It did not really enter into the overbought condition, so I will not consider this one yet. Rather, I have to wait for the market to come back down. Another important support here is this very area, because after the market move from here, market come back down here and come into this very point. So this very area is also a strong support. If you notice, I'm not considering this area, I'm not considering here, I'm not considering this very level, I'm not considering this very level. So there are key levels that you must have to pay attention to. So once you can pay attention to this level, then you've done 50% of the work. Reason why, when markets come into such levels, markets will always react to it. Very, very important, except you see a breakout. So this is a very important concept. So you can use the stochastic oscillator to identify your key support and resistance level very, very fast. If you are very new to trading and you don't know how to do pure price action analysis, which we teach our students in our trading course. So this is another thing you need to do about support and resistance. So this is how you can identify support and resistance, which is very important. The next thing here is how to trade support and resistance. The simple concept that most of us know is buy from support, sell from resistance. What does that mean? What that means is, if market is moving upward, come down, you sell from here. Market is moving up, you buy from here. Market move down, if you're a counter trend trader, you sell from here. Market move up, you buy from here. That's a simple concept. And then this is a trending market, and then let's say, for example, market is in a range, so market move up and down in this formation. The simple concept that you all know, or that you can see out there, is sell from here, buy from here. Some person actually went further to say you have to allow for 3 touches, which is very important, is cool, or 2 touches on the support before you can actually take a buy position. So when market come back down, you buy from here for the market to move to the upside. It's fine. There's no doubt about that. That's okay. And then for a downtrending market, you can see some things like market coming back to the downside. Okay, so you sell from resistance for market to begin to move downward. In this very case, that's also very important. It's perfect, but there is something I want to show you. This is what I use in my trading methodology, and it's very important. I just want to share this with you. So pay attention. Right here, you see the market move all the way from here to this very point, and then come back down, and then begin to move upward, and the market is at this very area. If you identify this area as a strong resistance, which we have a strong resistance right here as well, we have a support here, we have a support here, which is also very strong. The best way to trade support resistance is to properly read the market, and that is a concept that I personally elaborated in the Forex Advanced course. So if I am considering this very area, let's say for example this very area as a support zone, or I have identified before as a solid zone for market to move up, how am I going to trade this in the face of this very drastic downtrend? It's very simple. You go back to a lower time frame, and you have to use the multiple of 4 and 6 factor. There is what we call the multiple of 4 and 6 that we teach in the academy. I'm not going to go into that, but if you use this concept I'm going to talk about right now, it's going to really help you. So we are on 4-hour chart here, so you go back to the 1-hour chart. So on the 1-hour chart, this is the very area where the support started. So very important, how does the market move from this level of support? How does the market move? That is the question you need to ask yourself. How does the market move from this level of support? Markets move drastically, right? So market move with strength. Yeah. So after this market movement, you are not going to take the trade immediately because market move drastically or because this is a strong support. No. The first thing we want to see is that markets should give us a sign that there are buyers in the market for market to move up and down. Now, one thing I want to point out before I continue is that don't look at yourself as a trader yet. You are not the one that moved the market. Traders, no, I know we are all traders, retail traders for that matter. People that actually move this market are the bigger boys, the bigger players in the market. You can call them the money bags. People that trade with tons of millions of dollars in this market. So if you are not thinking like them, if you are not entering the position where they are entering, then most time you will be in the wrong direction of the market, or they can trick you out. So if markets move aggressively, it also means that the markets have strength to move upward. First thing first. Now, before that time, if you look at the 4-hour chart, this was just like a consultation. But if you look at the 1-hour chart, something very important here as well. Look at it here. If the market move all the way from this zone, come back to the upside, move again, create a new low. This low is just like a liquidity grab. So liquidity grab all the way from this very area and then begin to move down. So from here, market move up a little bit and then come up, and then we see a break out of this zone. Please, I think that's a mistake. That person should delete all of this as you are doing right now. Thank you so much. Hit delete all of this. Okay. So from here, market break this very zone at this very point. So after the breakout, market move up to create a new high. So after this high, market move and then begin to move upward. This is the only time you are permitted to take a buy position for the market to move upward. So once you place a buy position at this very point, because you've seen the market move up, and then at this very level of support, that is when you can take a buy position. At this area, you are sure of the market moving upward. The first thing is that we see a liquidity grab from this area. Market go down a little bit. Maybe people that place buy, at this very point and place stop loss just slightly below this very area, they have been taken out of the market, and then market move upward and first of all create a new high at this very point. Market come down and then move up a little bit. This area, that is this very candle right at this very point, this very candle, you can take a trade after the close of this candle. You can take a trade after the close of this very one. Either one is a good point to take a trade. And afterwards, market is going to move upward. It's a simple concept. If you apply it, you are going to be in the right direction of the market most of the time. I mean, most of the time. And then if you take trade here, either at this very point, or at this very area, or at this very area, then your stop loss can never be here. This is, if you place stop loss here, then this is a very amateur way of placing stop loss. The way we teach here is that either you use your ATR, which is an indicator that can help you spot out where to place your stop loss based on that very true range, and then give you a nice place to place stop loss. Or if you are very good in price action, you can place your stop loss slightly below. So for me, I would love to place a stop loss on the next support, not this very support. The next support is this very area. So since I see a spike here, I will place a stop loss slightly below this spike, so that should in case the market come down against me, this spike have a high capacity of holding it. So if this level did not hold it, this level of support should hold the market to move upward, or this spike the market should reject from here, because that is what we see right here. So this is the way you enter your position from a strong support and resistance level. Now, you've learned that not all support resistance level is important. So the first thing you need to do is to identify key levels. And when the market come into that area, you trade from there by going back to a lower time frame. So that you can be in the right direction of the market most of the time. This is a very important concept. So Having said that, markets always move in the direction of the big players. Markets always move in the direction of the big players, and that is why you need to be very careful with your trading methods. Very, very important. So one thing that is also very important here is that when trading support and resistance level that is in a zone, let's say for example, markets move up, come back down, move up, come back down, move up, and come back down. This very area is a strong support. This very area is a strong resistance. For market to move down, you must monitor the way the market moves down, just like I just did. For the fact that markets obey here 1, 2, 3, 4, or 5, 6, 7 does not really matter. Like, it's not very important. We want to find out when market come here, what do we see? Did market move significantly downward, and how does it move? So we want to see momentum, we want to see strength in buyers or sellers. Buyers in the case of a support, sellers in the case of a resistance. This is the most important thing you need to understand. And then when market break out of support and resistance, let's say for example, if market break out of this level, we want to see how the breakout occurred. Was it strong? Because if this level is very, very strong, we should see a very strong candle breakout. Strong candle breakout means that there was a lot of force that is required for market to break, and that force really happened for market to move upward. If you look at the chart at these very points, if you look at this chart here, to confirm that this very level was very strong, which the market failed to break with this level, and we see a reduction in momentum with this red candle, market have to use force to break it. So it was a very strong resistance, not only a resistance, a supply, which I'm going to talk about later in today's training. So market break and then reduce momentum. This reduced momentum means that the buyers are tired of moving the market to the upside, and there is a very strong likelihood that market is going to move downward. That is the way you trade. So therefore, I will take this level into consideration, this very zone. We have resistance. We have resistance. Remember, resistance is not a particular point, it's a zone. We have support. If market move upward, I will pay attention to this very zone right here. There is a likelihood that market can move here and then come back down. And one of the things you can use to spot that out immediately is by using the stochastic oscillator, which can help identify if this level will be strong or not. And when markets come here, you must have to monitor the way the market move downward, because it may not have the capacity to move down. The way it moves from this resistance is very, very important, and that is the way you need to read the market from today onward. Don't just see support and resistance level and place buy and sell trades. It does not work like that. I know that is a general notion, a general idea about support resistance, but that is not how the big boys, the big players, place trades. And if you've been placing trade like that, please change it. It's not going to help you in any way, not at all. No, it's not going to help you. The next thing I want to talk about today is Forex S&D trading concepts. Forex S&D trading concepts. What S&D mean is supply and demand. In fact, this is one of the most important concepts that I emphasize in the academy, because nothing move upward, nothing move downward if there are no sellers and buyers in the market. Proper understanding of this concept of supply and demand is very, very important and necessary. But before I go into that, I want to show you something in a moment. Like I said, if you look at the WhatsApp, we have the WhatsApp group which all of you are in right at these very points. And like I said, if you miss out on the training or you want to watch the recording again, it will be available at the end of the course. And please help subscribe. The link is already here already. You can use to subscribe to our channel to get updates. One important thing I want to show you too is the fact that we have a Forex signal group, which is very, very important. And I want to show you because this academy is about you making money. Your success is the most important thing. And we just started a signal group this week, Tuesday, which I'm going to show you right here. We took some trades right at this very point. Everything is very transparent. There is nothing to hide. If you know that you are a trader, you know how to trade very well and be proud of it. And if there is anything that I can boast of, is my technical analysis. We took this position, we're in massive profits. We took usdcad sell. You can find that out yourself later. And then we took a lot of positions here this week. But if you look at the review, because we have to do review of our trades every week, see how much we lose and how much we win. This is a review right here from Tuesday to Friday. We took this sell position 50 pips. We took Euro USD sell 60 pips, USD card 40 pips, Euro card 8 pips. Because one thing is very important, guys. Look at it here. USD, this is Euro card. After the Bank of Canada released their interest rates, I was expecting that the market is going to go down, and afterward, market begin to move in the opposite direction. One thing is very important. When you take a trade, be very dynamic about the position. Dynamic in the sense that you can change your perspective about a position if the market is not going that way. Don't be so adamant and stick to a very maybe level or trade, because trade can go in the wrong direction, and that is fine. It's okay. Everybody loses in the market, but how much you lose is very important. How much you lose is very important. So the reason why we close the trade is because I discovered that the market is going to go against us. So after the data release, that was on Wednesday around this area, market began to move upward. For us to be in massive loss, I quickly saw it and I told them to leave this trade, and it was just 8 pip loss. We took another position on AUD card 35 pips, Euro USD 25 pips, and the last position here was Euro NZD 53 pips right at this very area. If you can see it very well here, buy Euro USD, and you'll be given the entry, the targets, the SL, and the risks you should use for each of these positions. This is very important. So how can you join this? Is very simple. The only way you can join this is by enrolling into the academy first of all. So we have some courses right now that you can take that can benefit you immediately. I mean immediately. And most of these courses, in fact all of them, is on discount offer from today to 6th of next month. So if you look at the WhatsApp group right now, I just drop the courses and the packages is there. So if you look at this very point, you see right here on the group right now, I just drop it. We have the beginner course, which is the benefit of the beginner course is that you will take the beginner course, the beginner package, which goes for 25,000 naira. You will have the beginner course, and it comes with a curriculum. It's not something we are just teaching you and leave you like that. No, it comes with a curriculum for the beginner course. You have 1 month access to this signal group, and then you will be receiving free market updates, which comes with trade setup. You'll be given an ebook, and it's my personal ebook that I developed for beginners, strictly for beginners. Okay, and then you will be in the beginners general group. So we have a beginner general group where we drop signal once in a while that you can also be added to. So these are the benefits that you will have. The most important thing is that people that that took this signal this week, they are already withdrawing their profit, which is very important. You can also join us. And then the Forex Advanced course. Now, the Forex Advanced course is geared to towards concepts like this, advanced trading concepts, how you can read the market. And one of the things I'm going to show you there is this, the S and D trading concepts, because you must have to understand certain things for you to be profitable. So if you're not profitable yet and you understand all the basics about Forex market, but you're not profitable, not at all, this course is for you. The advanced course is for you, and it goes for 60,000 naira, which is $90 at a fixed price on discounts. I've already removed the prices, and what you will gain is the advanced course. And one other thing that is very important here on this package is the fundamental analysis course. If you go on YouTube and you Google or you search for Forex fundamental analysis, I can guarantee you, because I've been in that place before, you will never see a pure course on fundamental analysis. It doesn't exist. But I have come out with a technique that I have used over the years, 5 years of trading, that works for me. And the two most important fundamental analysis that we consider in this academy is the interest rates, which is for the United States, the Fed interest rate decision and the FOMC meeting, and secondly, the CPI data. So we consider 6 major countries for the 6 to 7 major major currency pairs. Once you understand certain things about interest rate and CPI data and the way it reacts to the market, then you will be in the right direction of the market. See what happened after the Bank of Canada released their interest rate on Wednesday. From here, market just dropped down and market has been moving upward. So if you have the technical one, the technical know-how, which is a fundamental part of it, market is going to move upward. This movement is not normal. It is initiated and triggered by a fundamental factor. That is why in this academy we advise that everybody must be a technical trader and a fundamental trader. Don't be a technical trader alone. Be a fundamental trader too, so that you don't be ignorant of what the fundamental guys are doing. This is what will give you an edge in the market. So these courses, the Forex beginner costs 25,000 naira on discount, and these are what you're going to benefit. And then the advanced cost is 60k, and this is what you're going to benefit. And the discount end on the 6th of next month. Other benefits for advance is 2 months access to the signal group, and 2 months market update and setup. You also have free ebooks, and then you have lifetime access to the advanced group. That's the Forex advanced group. This is different from the general group. For your information, we also lead you to get a prop firm account of $5,000, $10,000, $20,000, $50,000 or $100,000 as the case may be. We are talking about legit pro firm accounts that you can use in trading. We will lead you to getting this account. Not only that, Signal from here will help you make money from the account as well. So this is very important. Grab the course immediately, and all payment is to be made to the company's account. Now, let's say for example, you feel you know how to trade, like you really know how to trade very well, and therefore you don't need any of these courses. You don't just need it. Then you can enroll for the subscription. So you can actually subscribe to the group. So the subscription is a very simple one. I will also drop that also in the group after this very trading. So grab a course and do yourself the good of knowing how to trade perfectly. So let's jump right in from where we stop. So what is the S and D trading concept? If you come back to the chart right here, for market to move upward, there must have to be a buyer, and for market to move downward, there must have to be a seller. Nothing more than that. The first thing to identify where a support is, and resistance, I've talked about that. For supply and demand, before I explain that, if the market move upward, then there is a strong demand there. If the market move downward aggressively, then there is a strong supply there, and such levels should be taken into consideration. One of the most important things you need to watch is where there is a drastic move downward or upward. Those levels are strong levels, and we call them supply and demand level. Let's say, for example, if you look at this area, market move downward. So from this area, market move downward, drastic movement downward. There was no interference of any bullish candle. So therefore, I will term this a supply zone. Reason why: sellers move the market aggressively to this area. Remember, this is strong resistance. So all of this area is very, very strong. So from supply, market drop down. This area here is a strong support, but it's not a demand zone. So there is two important things here. This is a resistance, but it's not a support. Market move upward. You see, when market come into this zone, this very area, it reacts. Why? Because there is a strong supply at this very point. So supply level, market should sell from the supply zone. Market do sell, but the sell did not create a new low than the previous low at this point. So therefore, this market should continue upward. And then market begin to buy up till this very point. At this very area, we see reduction in momentum. Market crash back down. This very area is another supply. Reason why: market move downward drastically without any interference of bullish candle. What that means is, when market come into this zone, market will definitely react because there is a strong selling pressure from this very area. Very important. This is a supply zone. We have right here a demand zone. Market move, this demand zone was not very strong, but it was a smooth move upward. So market from here move up. What I am expecting is that the market to drop down to this very point as we open the market this night. That means there should be a continuation of this move downward a little bit before any movement upward. That is what I'm expecting, and that is why you need to subscribe to the channel right here, because I posted that update right here on the channel, which is very, very important. So from here, we see the market move up. We have a very strong demand zone here. Market move up drastically. Now, is it only area where market move drastically from that you should pay attention to? The answer is no. We are looking at where we see at least 3 candles consecutively bearish, at least 3 candles consecutively bullish, 3 candles consecutively bearish, no interference, 3 candles consecutively bullish, no interference. So you can identify this as a supply. You can identify this as a supply. This is also a supply zone. This is a demand zone. This is a demand zone. This is not a demand zone. This is a demand zone. So this is how you identify supply and demand levels. And when market come into that level in the future, it will definitely react 90 to 95% of the time. If you apply these concepts together with understanding key support resistance, you are good to go in the markets. Then another thing you need to do is momentum trading, understanding momentum. So if market is moving from here, when market enter into this level in the future, what happened? Because you're not just going to take a trade. Remember, I told you, you have to wait for the market to react on the lower time frame. A retracement is necessary because the market can move up a little bit to collect liquidity and then before moving back down to the downside. So you must have to understand the concept of momentum. And I've told you, when market enter into this area, wait. We need to see some bearish presence that will make the market to react on the lower time frame. a movement that failed to create a new high and then a bearish presence again, mean that market is going to go down. Then you now come back to the higher time frame where you deduce this very supply zone from and monitor the way the market is going down. Because if the market is going down, you're already in the trade, but market is moving sluggishly downward without strength from this level, then that means this is an impulsive move, this retracement for market to move upward. This is one of the best way you can ever trade without using any indicator. When I mean indicator, I mean any indicator. And if you have this concept, if you know how to trade this way, then you can easily use your indicator, because you are not actually depending on indicator at that time. You are only using indicator as other factors of confluences. One other thing you need to understand is that not all supply zone, not all demand zone are support level, but all demand zones are support level. So not all support are demand. Like I said, this area is a support but not a demand. But this area is a support and also a demand. This area is a supply and also a resistance. But this point here is not a supply. This point here also is not a supply. But this area is a supply and also a resistance. So you must have to understand this thing. Not all resistance are supply, but all supply are resistance. Not all support are demand, but all demands are support levels, which can be key levels or not. And you have to understand that when market reacts to a level, the capacity of it not reacting very, very much in the future exists. One thing before I come to conclusion tonight is that understand this. When a level reacts in the market, pay attention to the level that are very close. I see some people, when they want to draw the resistance support, they will go back, far way back, and draw this one from here and begin to move. No, you don't have to do that. Consider the one, because this very level of support right here is important than this one. Market has not come here, but market has touched here a little bit with this. So this one is important than this. What that means is the support and resistance that are very closer to the market, which is very key, are the most important ones. Just like this. This resistance, which is also a supply zone, is very important. So you first of all consider this before you consider any other supply after this one on the chart. This is how you better rearrange the way you look at the market. Not like any other person do, or not like the way you see on YouTube, with a common method of resistance and support. So this is a very important concept, and further explanation with further details will be given in the training course. So you can enroll for a training course. You can reach us here on WhatsApp or a phone call, which is very, very important. I've already shown you the courses right here, and you can grab a course right now on this group. And one other thing is that we also give free signal. So I'll be dropping free signal once in a while on this group as well for you to see, and you'll be receiving market updates. Market updates come here oftentimes, so we'll also give you that. Like I said earlier, if you are just new to Forex and you don't know how to trade at all, I have cool videos for you, which is very important here. If you look at it right at this very area, we have a very important course that you can take right now and begin to learn how to trade. We have a lot of Forex resources that you can get from here. I'll post the link on the WhatsApp so that you can get to the video directly to begin to learn the basics of Forex trading, so that you begin to understand certain things about the market. And lastly, before we end tonight's training, you can ask your question, Q&A, if there is anything you don't understand about what I've just talked about, support, resistance, the ones that are key, the ones you pay attention to, and the concept of demand and supply. Any question, so you can just unmute yourself and ask your question. I promise you to limit this training within the circumference of 1 hour. Any question, you have any question, it must not be for support and resistance or demand supply as I've just talked about today, it can be anything in Forex. I will answer you. Anything at all in Forex, I will answer you. So Q&A section, just unmute yourself and ask. Or you want to ask anything about the course, you can also ask as well.
Hello, sir.
Well done.
Are you going to teach us US in dollar index? Because
US dollar index is a very simple thing. If you know how to do technical analysis, then you can know how to analyze your dollar index. We have almost all the major currencies have their indexes. For example, the dollar is the DXY. So the DXY is the dollar index. Let me check it here. We have the DXY. So you will be teach how to analyze this. But the thing is, if you know how to do good technical analysis, then you should know how to analyze your indexes, both for dollar, euro, and GBP. This is not coming up. I'm very sorry, I'm supposed to show you, but you have DXY as for your dollar, and you have EXY for the euro, and you have BXY for the Great Britain pound. So it's not coming out now. Okay, we have this here. You see BX. Okay, let me try DXY here. DXY. So we have the dollar index. So indices is under indices. So you go under indices to find that out. So you have this. And then one thing about the dollar index is that I use it. Most of my trade is based on the index, because if dollar is increasing, then you should trade in line with the dollars. So if dollar is falling, just like you see here, if you look at this very area on Thursday 19, dollar falls. Okay, so this was a drop, and then you go to euro USD for Forex. If you look at here on Thursday, market drops. Very important. If you look at here, euro USD, market drop. That is dollar increase. If you look at DXY on the indices, if you look at it, dollar increase, and that is what caused the increase in dollar on euro USD. That is, the euro USD chart was going down on this chart right here. You see the market drop. So if you understand how to use the DXY, you should also be in the right direction of the market, which we are going to teach you. We're going to teach you that. Is that clear?
okay.
All right. So the next question, please. Any other question? Marvelous asks.
That part not all resistance and support. I didn't really get that.
Okay, I said not all resistance are demand. Not all resist. Not resistance. I mean support. Not all support are demand. So this is a support area. Market move up, but it's not a demand area. But this is a demand area too. This is a demand area and also a support, because market move up from here. I said for you to identify demand is where you see drastic movement with smooth candles. For example, in this case, bullish, 3 consecutive candles, at least 3 consecutive candles bullish for demand, for you to call a zone or a level a demand zone, and 3 consecutive candles bearish downward without interference, for you to call a level a supply. So a level can be a supply, which you can also call resistance, but a level cannot be supply and resistance. That is, in this very case, let me find that out for you. In this very case, this is a resistance level, but it's not a supply. That is why I said not all levels are supply zone, but all supply zones are resistance, but not all supply are resistance. All levels you are seeing right here, they are resistance, 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 but this very area is a supply, but also a resistance. But this very area right here is not a supply, but it's a resistance. If you look at this area, this very point is a demand and also support. Then if you look at this very area, this very point is a demand too and also support. If you look at this area, this can never be a demand, but it's a support. This very point here is never a demand, but it's a support. So I simply put, not all resistance are supply. Not all resistance are supply, but all supply zones are resistance. And not all supports are demand, but all demand are support levels. I hope you get that right.
Yeah, thank you.
All right, that's great. Godwin asks, yes, that's the reason why we're talking about it, because they are important. If they're not important, I should not be talking about it. And where you see supply, in this case, you see this very area, or demand. We are saying that if you are in a trade and market approach this zone, what you should have to do is to plan to exit the trade. That means this area should be a target. If you enter trade from here and market is moving up, this area should be a target. See how market react from this very point of supply, this very area of supply. See how market react. See how market react. This can collect all the profit you've made in the market in just maybe a few minutes or a few hours. What it means is that your focus should be on this zone where you have supply and demand, because market have high capacity of reacting from that level. And like I said, you can take trades from that area, and when you want to take trade from that area, you wait for the market to react first. You must see, let's say in this case, market have to come here and show you some sign that it's going to go down. Don't just because it's a supply zone and place maybe limit orders. That's what some person do. Place market can go over a little bit and come down. So we want to see on the lower time frame, market come down, go up, fail to create a new high, and then begin to come down again with some bearish presence. That is when we want to take our trade from this very level that we've already identified on the higher time frame. So there is peculiarity. You have to give attention, in fact, more attention to supply and demand areas on your chart, which is also supports and resistance. So you now understand how we are filtering out levels that are not important and levels that are important. So if you connect the dots between your strong support and resistance and supply and demand, you should know the level to pay attention to and the level not to pay attention to. You should know the level to set your stop loss, how to set your stop loss and your target by using these levels. I believe I answered your question, right? The next person.
Yes, sir.
Any other question? Any other? Very important. Any other question? Okay, so in the absence of any other question, very important, grab a course for yourself before the end of 6th of November and have the discount offer 25 for the beginner course, and the advanced course is 60. And for this advanced course, you can pay in installment. Beginner, no installment for that, and you will be added to the Signal group and you can start making money immediately. And if you are still maybe skeptical about the Signal, you can stay in this group, and I guarantee you next weekend, I mean this week we just enter now, you will see the updates from this very Signal group that I just show you right now, because we will be doing weekly review to prove that any person at anywhere at any time can be consistent in trading and making good amount of money from it. And we've proved that over and over again, and we can see prove it over and over again. So join us, and I guarantee you will enjoy it, and success is guaranteed when you join us in the academy. Move from the general group into the academy and become a student and begin to learn. Now, one thing very important, consider trading as if you are going to a college to learn a skill. Trading is a skill. If you don't know how to apply the skill rightly, maybe you just bubble into trading online, begin to watch online videos, you may not be successful 80% of the time. So you need somebody to guide you through and mentor you in the process, and that is what we are doing right here in Remit Forex Academy, which is under the umbrella of Remit Trade Academy. Thank you very much for coming through tonight. Please don't forget to subscribe to our Forex channel for everyday forex resources, which is very important, market update, signal, and what to expect setups that you should be watching out for will be posted on this very signal. So don't forget to subscribe to receive that very notification. Thank you very much. I really appreciate you staying till the end of this training, and thank you very much once again. So thank you very much. At the end of the course, I am going to be dropping the recording of this video in the group you are in, I mean the WhatsApp group, so that you can watch the recording over and over again.